All right, today we're diving into something huge. Morgan Housel's The Psychology of Money. We're going to pull out 8 key rules that might just completely change how you think about wealth. Let's get right into it. So, let's kick things off with a pretty wild thought. What if everything you've ever learned about money is, well, wrong? Or at least based on just a tiny piece of the puzzle? What if there's this whole other human side to it that we've been completely ignoring? Well, that's exactly what we're going to dig into today. This isn't about fancy stock charts or trying to predict the market. Nope. This is all about looking inward, understanding our own crazy behaviors, our biases, and all the surprising ways our brains handle the topic of money. So, our journey starts in a place you might not expect. We're not opening up a spreadsheet, we're opening up our own minds. These first couple of rules are all about getting a handle on the psychological framework we're all stuck in before we even think about making a single financial move. Okay, get this. Morgan Housel makes this incredible point. Your personal experience with money, everything you've ever seen or done, is just a tiny, microscopic sliver of all the financial stuff that's ever happened in the world. And yet, for most of us, that tiny sliver makes up like 80% of how we believe the entire financial world works. Kind of crazy when you think about it, right? And that brings us straight to rule number 1. You just don't know everything. None of us do. Your whole financial worldview is pretty much sculpted by when and where you grew up. If you were born in the 70s and saw the rise of index funds, that probably seems like the smartest investment ever. But if you were born in the 90s, you might be looking at crypto thinking, now that's the future. We've all got these massive blind spots based on our own limited experience. And that flows right into rule number 2. Nothing is ever quite as amazing or as terrible as it seems at the moment. Look, every single financial outcome, every win, every loss, is shaped by things that are way outside of our control. We love to chalk up success to being a genius, right? And failure to making a dumb move. But the truth is, the invisible forces of luck and risk are always pulling the strings in the background. Okay, so we've admitted that our own minds can be a bit of a minefield. What now? How do we actually build a strategy for wealth? Well, these next 2 rules are all about the practical nuts and bolts of how you can start accumulating wealth. Rule number 3 really hits on something deep. Just knowing when enough is, well, enough. The biggest danger in the money game isn't just taking a bad risk. It's pure, simple greed. It's that trap of constantly moving the goalposts. You hit a goal, and instead of being happy, you just set a new, higher one. And the absolute fastest way to feel like you're failing? Comparing yourself to other people. It's a game you will literally never win. All right, rule number 4 is maybe the most powerful force in the universe, compounding. And there's no better example than the man himself, Warren Buffett. Look at this timeline. It's wild. Most people have no idea that the vast, vast majority of his fortune, we're talking over 95% of it, was earned after he turned 65. His secret weapon wasn't just being a brilliant investor. It was being a brilliant investor for over 75 years. It was time. And this chart, it just hammers that point home. You've got Jim Simons, who is, by the numbers, maybe the greatest investor of all time. His returns are insane, 66% a year on average. That's 3 times what Buffett was getting. So why is Buffett so much richer? The answer is sitting right there on the screen. Time. Buffett had a 50-year head start. It's a perfect lesson. Good, steady returns over a really long time will beat spectacular short-term returns almost every time. Okay, so you've learned how to get rich. That's the fun part. But here's the twist. Staying rich, that's a totally different ballgame. Our next 2 rules are all about survival, about playing defense with the wealth you've built. And this is what Rule 5 is all about. Think about it. Getting rich often means you have to be optimistic. You have to take some big swings. But staying rich, that requires the total opposite mindset. It requires humility. It requires a healthy dose of fear. This little voice in your head that knows that everything you've gained can be taken away just as quickly. You need a little bit of paranoia to protect what you've got. Now, a huge part of staying rich is just being thrifty, which is really just the simple habit of spending less than you make. But there's a really important difference between being thrifty and being a miser. Being thrifty is smart. It's about buying yourself freedom and options for the future. Being a miser, on the other hand, is like a psychological prison. It's this deep-seated fear of spending any money at all. And that brings us to rule number 6, diversify.
This chart is awesome because it's based on the author's actual portfolio. Look at it. He had 14 stocks, and half of them were losers. They lost money. But the winners did so incredibly well that they completely canceled out the losers and still gave him a 40% overall return. The lesson here is so freeing. You can be wrong half the time and still make a ridiculous amount of money. A few huge wins are all it takes.
Okay, so we've covered our mindset, our strategy, and how to play defense. But now, for our final two rules, we have to ask the biggest question of them all. Why? What is the actual point of all this? This is where money stops being about spreadsheets and becomes about, well, life. This quote from Morgan Housel really captures the essence of rule number 7. It's all about what true wealth feels like. The ultimate goal isn't just a bigger house or a flashier car, it's control, it's freedom. It's about being the master of your own time. At the end of the day, the biggest and best thing money can buy you is control over your own time. That's it. It's about having options. It's about being able to walk away from a job you hate. It's about being able to take a mental health day without worrying about the bills. It's having a cushion when life throws a curveball at you. That kind of freedom, that's the real return on investment. And now for our last rule, rule number 8. I want you to think about this for a second. That super flashy sports car you saw on the street last week, can you remember who was driving it? Probably not, right? You remember the car. And that's the trap. When we buy fancy things to get other people to admire us, we totally forget that people don't admire us. They admire the thing. We're trying to send a signal, but the message almost never gets delivered the way we want it to. Now, this doesn't mean you can't ever buy nice stuff. It just means you should be smart about it. Here are a few great rules of thumb. First, the twice rule. It's simple. If you can't afford to buy it twice, you can't really afford it. Then there's the 30-day rule, which is perfect for fighting off those impulse buys. And maybe the most important one, try to buy your toys with the passive income from your investments, not from the hard-earned money you need to keep working for you. So, there you have it. We've gone on a whole journey, from our own psychology to building a strategy, and finally, to figuring out what the real point of wealth even is. So let's do a quick recap of these 8 amazing rules.
All right, here's the cheat sheet. 1. Admit you don't know everything. 2. Remember that luck and risk are always in the picture. 3. Figure out what's enough for you and stop the comparison game. 4. Let compounding do the heavy lifting over decades. 5. Know that getting rich and staying rich are 2 different skills. 6. Diversify because you're gonna have some duds. 7. The real prize is control over your time. And finally, 8. Don't go broke trying to look rich.
So I'm going to leave you with this one last thought. The real goal here isn't just to pile up a bunch of assets. It's to build a life where you have freedom and a sense of purpose. So invest in yourself, your skills, your knowledge, your character. Because true wealth, that's when people are more interested in you than in the stuff you own.